So you recently wrote a paper, and it's called SVB, ChatGPT, and the Future of Trust: The Bitcoin Moment. Now, what's fascinating to me about this, SVB, debt limit, and Bitcoin, there's a lot of people connecting those three things. You included ChatGPT from OpenAI. Why are you looking at artificial intelligence as a key component to this thing that you're calling the Bitcoin moment?
Well, the first thing is I have viewed in my world of uh, allocators and pension funds investing, just to give your viewers slash listeners an idea. The United States right now makes up about 60 to 70% of the MSCI world stock market. Meaning, if you, as a pension fund in Germany, are benchmarked to MSCI World for diversification, you currently have 60 to 70% of your investments within the stock world in the United States because our companies are bigger than many GDPs of the world, particularly with Microsoft and Apple. So part of the belief in technology with artificial intelligence and the blockchain kind of accelerating right now is I view them as a decentralization moment. Now, when people hear decentralization, some people view this as it's not going to happen, it can happen. Well, any scheme that's going to work, whether it's the fiat scheme or whether it's another competitive scheme, it just takes trust. And the rest of the world is going to benefit dramatically from the decentralization of things like ChatGPT. It allows a kid sitting in Africa to create amazing ideas as long as he can access data because he has this engine. So we used to need data scientists and coders to do a lot of this. Now you just need ideas. You're taking the art of coding and you're making it something that's commoditized, which allows other countries to come up with ideas to solve problems. And I think they're sitting there with brains that didn't go through the same school system, which in my opinion forces people to have a rigid thing like a major where ideas are really kind of global. And so I have viewed this moment for the Bitcoin moment as a moment for artificial intelligence and blockchain to start the real passion for decentralization through the US no longer having the dominant place for technology and innovation, and that it's going to spread. And when people hear this, they think, well, you're negative on the US innovation. No, we'll still be a global leader in innovation. I just think the rest of the world is going to grow at a faster pace in this because they depended on our technology, and now they're going to have stuff which is going to allow them to speed up the competitiveness.
You ended this letter with the following passage. You said, trust in the stories of the pillars of the fiat system is breaking down. Each day, the belief in the government's ability to keep the leaning tower of leverage from falling is driving talent and capital to a new path in the cryptocurrency world. I think artificial intelligence and the deposit flight in the banking system are both moments that will accelerate this distrust and be a significant inflection point for the Bitcoin story told in the decades to come. When I read that, what I took away was, one, these are trends. This is not a static photo in a moment in time. So the banking deposits is not just about what happened on Thursday and Friday before SVB collapsed. It is part of this trend of loss of trust in the banking system. The debt limit crisis is not just about this specific debt limit crisis, but the overarching trend of loss of the US government's ability to control debt and various other things that they're doing. But also Bitcoin is a moving target as well. There's a story there. It's not a static evaluation of it. How do you look at Bitcoin's kind of rise over the last couple of years, right? Obviously, pre-pandemic, I think Bitcoin was drastically seen as kind of a toy by many people. There weren't a lot of kind of macro, kind of Wall Street hedge fund managers that were talking about it openly to the public. That all changed in 2020 going into 2021. How do you evaluate that time period now?
Yeah, it's it's really interesting because when you go through it, the whole point of writing the paper was that there's a lot that's happened since 2020, and we get caught up in the growth rate of things. So, we had M2 grow by an enormous amount in a short amount of time. I tweeted today that last month, or I'm sorry, in March, it was the largest percentage decline in M2 in the country going back to the 1950s. We had an over 1% drop in M2. Now, 85% of M2 is bank deposits. So to your point, we have bank deposits that are declining. But if you go back and look at SVB, the story that people hear is SVB collapsed and they lost 200 billion of deposits. Part of the story was they only had less than 50 billion in February of 2020. They gained $150 billion of deposits during the pandemic. and they had to turn around and invest that money somewhere else. So when you really read the story, people get focused on the collapse. I get focused on how could a bank attract 150 billion of deposits during a pandemic when people can't leave their home? And this was obviously the printing of the Fed, the helicopter money that Ben Bernanke had put out. And so when you look at it and you go through and like, okay, so the deposits went up dramatically. Now they're declining, but the decline has never happened before. And that's the thing people have to realize is that I look for things that are new. The decline in deposits is a new thing. The regional banks are falling and people see them in the news, and you have a lot of smart people saying it's not going to stop. That cannot be minimized as an event. It cannot be minimized as something that's important. Those regional banks, they're part of the decentralization movement, because who are the banks that benefit? It's Wells Fargo, it's JP Morgan, it's Bank of America, it's all the big five and the too big to fail banks. And so that has led to people looking for another alternative. And if you want to use an analogy, I use the BlackBerry iOS. Think about your grandparents and the people that were maybe in their 70s and 80s who refused to get an iPhone, who didn't use Uber. They were looking for taxis, and what eventually got them to force was to change were two things. And I have my stepfather is 89 as of last week, and he did not use an Uber, I think, until 2019, just before the pandemic. And if I asked him why, he eventually reached a point. He's like, well, this thing has lasted for 10 years, so I guess I got to do it at some point. He got an iPhone in 2018. It took those events, but then there was one other thing. It was the fact that it was cheaper. It was easier. And I think that's what's going to happen with Bitcoin is more and more people are going to see that it's easier, that it's becoming an OG by being around now for 15 years, so it isn't going away. And when they start highlighting or they start paying attention, which is why I included the numbers, if you include crypto, Bitcoin as an asset in your portfolio, you've done exceptionally well over the last 10 years. But even over the last 3 years, you've done exceptionally well. Only last year would you have done poorly. And again, Amazon was down close to 50% last year. So it's not like this was isolated to this. This was innovation.